Assuming Elon succeeds in reducing accidents by 50% versus human drivers, wouldn't auto insurance rates fall to reflect the reduced underwriting risk, thereby adversely impacting GEICO's revenues and float and perhaps margins too?
Well, yeah, well, let's just take the extreme example. Let's say there are only going to be 3 accidents in the United States next year for some crazy reason that anything that reduces accidents is going to reduce costs, but that's been harder to do than people have done before. But obviously, if it really happens, the figures will show it, and our data will show it, and the prices will come down. There have been a lot of people talk about doing that in the past. I mean, General Motors used to be very big in the insurance business, and when Uber first started, they used some firm which now is, I think Ajit will confirm, they're close to bankruptcy now, aren't they, because of taking things on at the wrong prices? Is that true? Yeah. Insurance always looks easier than it is, and it's so much fun because you get the money at the start, and then you find out whether you've done something stupid later on. But it's a very tempting business when somebody hands you money and you hand them a little piece of paper. But really knowing whether if accidents get reduced 50%, it's going to be good for society, and it's going to be bad for insurance companies' volume. But good for society is what we're looking for so far.
That was the legendary investor and CEO of Berkshire Hathaway, Warren Buffett, talking about Tesla's FSD and how it'd be great for society if Elon Musk manages to deliver on his promises for the software. Elon replied to a post on X that said Buffett should sell all his Apple shares, which are worth $135 billion, and buy Tesla instead, saying that it'd be the obvious move to do. Now, we don't know if Buffett would be up for this, considering that he said at Berkshire Hathaway's 2023 annual shareholder meeting that investing in the automotive industry is just too hard, thanks to the tough global competition. However, we do know that Tesla's self-driving software is causing many analysts to turn bullish on the stock, and one of these analysts is Cantor Fitzgerald's Andrew Shepard. In this video, we're going to go through what Shepard had to say about Tesla stock, including his very bullish price with an upside of over 100%, and also his massive warning for Tesla shareholders. But before we do that, if you want to keep up with Tesla's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video. Cantor Fitzgerald analyst Andrew Shepard just began coverage on Tesla, and he immediately brought incredible news for Tesla stock investors. The lead equity research technology analyst at Cantor gave Tesla stock a buy recommendation and offered a range of possible scenarios and resulting stock prices, but he thinks the most likely outcome from Tesla's business plans will result in a stock price of $230. That would represent a 24.4% gain from where the stock is trading as of the time of this video. But what about Shepard's other predictions? Let's go through them right now. Hello everyone, and welcome back to Investocracy.
We're finally open to hearing with the implications. So why don't you take us through what happened on Tesla's earnings call and what changed?
Yeah, I mean, I think it's finally it's in the spotlight now more than it ever has been in the past, but I still don't see a ton of sell side analysis taking it seriously, I'd say. But yeah, what's different now is, on this recent earnings call, I'd say that robotaxis got a spotlight in a way that they have not before. Tesla previewed what the ride-hailing app could look like in the report that they published online. It's like a mock-up of what that app could look like. So they talked about sort of a mix between cars owned by Tesla versus, owned by Tesla owners. They didn't mention fleet owners, but I think that's how the this will scale as other companies will own fleets of Tesla vehicles, or maybe other company, depending. But, to zoom out, why do we think that this is such a big deal? Well, the price target that we published for Tesla for 2027, that we're currently updating now, $2,000 per share. In that analysis, we thought that roughly 2/3 of the enterprise value could be attributable to robotaxis. And it's because this is a business that will have recurring revenues, and it will also have margins, we think, that are much higher than the base vehicle business. So I'm really excited. I'm looking forward to the event in August. I can't wait to see, what other tidbits they unveil. They gave us the app. What are we seeing next? And it feels like, certainly from a software update perspective, that those are actually happening at a faster clip now as well. And Tesla said so. So every couple of weeks, we're getting a meaningful update to full self-driving, or FSD. I feel the difference. So I'm looking forward to that day when, my car becomes a fully autonomous car.
It may not be too unique or surprising to know that the analyst thinks self-driving software and lower-priced vehicles can be what pushes Tesla stock higher. In particular, Shepard expects the price cut Tesla recently implemented for its FSD software to $99 per month will boost sales this year. He believes that base case makes Tesla stock worth $230 per share. Notably, his base case assumes 2.1 million units shipped in 2025 with $1 billion in FSD revenue. But another very interesting scenario he mentioned has to do with the affordable Tesla models. Basically, he said that if Tesla manages to successfully roll out a lower-priced model beginning next year, the company's vehicle sales could go up to as much as 2.8 million in 2025. To put that number into perspective, you should know that early estimates are currently for Tesla to deliver about 2.1 million EVs next year, so he expects a boost of 700,000 extra vehicles sold if Tesla releases an affordable model. And if one model costs $25,000 as rumored, Tesla could earn an additional $17.5 billion in revenue from this. This, along with FSD sales reaching $2 billion in 2025, up from $750 million in 2024, could send Tesla stock to $460 per share next year, according to Shepard. This is an upside of over 100%, and while this is extremely exciting, the analyst points out that investors need to think about what would happen in the event those projections don't pan out. That's where his bear case comes in. If Tesla keeps hovering around the 2 million unit sales volume level in 2025 and fails to increase FSD revenue, the stock could drop as low as $70. This might sound drastic, but it could actually make sense, as many analysts think that Tesla will only be a solid investment from here if sales grow from self-driving software and a more affordable EV offering. It's not just Shepard that's betting big on Tesla, as Morgan Stanley's high-profile auto analyst, Adam Jonas, is also extremely bullish on the company. In fact, he recently shared some new thoughts and forecasts about FSD, and we're going to walk you through them now. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Reports say, and we were talking about this earlier, Tesla's interns that were incoming into Tesla have now been receiving calls that their internship offers have been rescinded. This is part of the latest round of cost cutting. It's according to a Bloomberg report, and cites LinkedIn posts and interviews with university students who said that their offers had been revoked about 3 weeks before their start date. This comes, of course, amid the new layoffs this week, and reports say that 2 high-profile executives and most of the company's 500-person supercharger division have been cut. Lots of consternation, by the way, on the supercharger piece of this, because they're opening superchargers all over the country, and some of them are going to. The construction projects are going to stop. What does that mean, by the way, for EV adoption? One of the things that I gave Elon a lot of credit for was he opened up his supercharger network to all EVs. Right. And so now we're going to have this sort of potentially halted network. Some of the salespeople, some of the construction people, all of it seems to be up in the air at the moment.
Well, if you had an internship
Yes.
And you thought you were going, I mean,
your summer internship, right? We're coming in
think,
May here.
wow, I'm going to Tesla to be an intern. And that would be very disappointing. Doesn't seem fair. I guess there must be some pay involved with the internships.
One of the things that happened, as you know, over the last decade is we've moved towards paying interns.
Paid interns, yeah.
You know, the old, you know, look, I grew up and I was able to do it, part because my parents were able to subsidize me, but I had an unpaid internship, right?
They still do a little bit.
I showed up and was, you know, getting the coffee for people and was very happy to do it for free. I could afford to do it. A lot of people couldn't. People thought that was unfair because it put people who were able to be in that position to be able to do it and others not. So then they said, you got to pay all the interns. But then flip side of that is that some people are like a Tesla, when they can't afford to do it, it's a different story.
While many analysts are worried about Tesla's cost-cutting efforts and see them as an ominous sign for Tesla's future, Morgan Stanley's Adam Jonas isn't at all worried about the company. He said that Tesla's leadership has a history of upping up the intensity when its back is against the wall, and that the company right now is in the midst of the most profound realignment of priorities and strategy in its history. After that, he said that he personally tried FSD version 12.36 and was very impressed by it, saying that it becomes cautious or assertive when it should be. He also noted that the improvements from FSD supervised version 12.34 to version 12.36 are quite evident. The Morgan Stanley analyst provided a notable estimate of the data that Tesla is currently collecting from its fleet. According to him, Tesla has about 5.5 million cars on the road today, and this number may grow to 25 million units by 2030 and over 50 million units by 2035. Jonas also noted that Tesla's vehicle fleet should be driving a collective 100 billion miles per year run rate by late 2025, and this massive number translates to 11.6 million miles an hour or 3,200 miles per second, or almost 2 billion collective miles per week. And given that FSD's take rate is expected to increase, a significant number of these miles could be driven without human input. For context, Tesla noted during its Q1 2024 update letter that its FSD fleet has traveled a cumulative distance of 1.3 billion miles, and Elon Musk also noted in his Master Plan Part 2 in July 2016 that worldwide regulatory approval for autonomous cars may be possible with 6 billion cumulative miles. With all of this in mind, is Tesla stock a buy at its current price? Let's find out.
Well, I want to ask the question to both of you. What do you think are some of the major hurdles to rolling out a robo-taxi network? Obviously, it's not as easy as just flipping on a switch and now everyone that has FSD capability can allow their car to go out on the road. So what exactly do you think are some of those hurdles that are not being talked about?
Yep. Tasha, you kick it off?
Sure. Yeah, I mean, I think the biggest hurdle really is solving for full autonomy. So I mean, you know, making the car work in enough corner cases such that you can actually take a person out of the front seat. That is by far, you know, the hardest step to cross. And Tesla hasn't gotten there yet. Although we are seeing pretty positive signs. I mean, a lot of the videos that are being posted online for the current versions of FSD show, nearly full drives, in some cases full drives, where the owner's not touching the wheel at all. So I think that if they wanted to, there's certain areas in the US like California where it works really well today, where they could launch. Then, a lot of people might say, well, regulatory hurdles those are a big deal. And not that regulation isn't something to think about. I think it is. It absolutely is. I actually think there's like a skew in how people view the regulation of autonomous cars because most of the activity has already happened in California or happened in California first. Because this state actually has more hurdles to pass than other states. So, and I'm talking like, okay, well, you get approval to launch a service, then you get approval to charge for a service. You might have to, we've seen Cruise and Waymo do some initial geographic area, then they need approval to expand. I don't think the process will work the same in every state, so I think it could be simpler. And we already do have quite a number of states that have either regulation that doesn't explicitly exclude autonomy or actually, favors it and has language that is friendly to autonomy. I believe it's about roughly half of states have that. So I actually don't think that regulation is as big of a deal as many make it out to be. I think it's really the technology.
As we've seen, Tesla gets closer to solving full autonomy each day. So this is one part of the bull case for Tesla stock, the other being affordable vehicles. Elon said in Tesla's latest earnings call that the new affordable models will come in early 2025, if not late this year, and this was praised by Wedbush Securities' Dan Ives, who wrote it appears that Tesla is going with a Model 2.5 instead of a Model 2, adding that he believes this is the right strategy and move at the right time. But investors won't have to wait until the new affordable cars are out to see some positive results from Tesla. In fact, Elon added on the earnings call that he expects 2024 vehicle deliveries to grow compared to 2023. It'll be interesting to see if Tesla actually manages to pull this off, considering that it delivered a record 1.81 million cars last year and the fact that EV demand has been slowing this year. Regardless, Elon and Tesla's management team are more focused than ever and said that they expect Q2 to be better, which could be true since many analysts expect FSD to boost Tesla sales. Elon revealed that Tesla will spend $10 billion on training AI this year, adding that no other automaker is investing in AI on that same scale, so they can't really afford to compete. This solidifies Tesla's position as the leader in full autonomy and opens up doors for lucrative FSD licensing deals. Of course, all of this won't happen overnight, so Tesla stock is only poised for strong growth in the long term, but if it manages to execute its current plans and strategies, Tesla stock could really reach $460. Adam Jonas believes Tesla's long-term goal is to offer autonomous ride-hailing vehicles, and that's where its value is. So as the company gets closer to this goal, it's hard not to be bullish on Tesla stock. But what are your thoughts on the analyst expectations? Will Tesla stock go to $460? Does that make it a buy now? Let us know your thoughts in the comment section. If you would like to know what Tesla has been up to these past few days, then go ahead and click on the next video on your screen. See you there.